Did you know there's a medical device market out there where 70 to 80 million people urgently need the product, but only 10 to 12 million are actually using it? Welcome, and thank you so much for coming to watch the video today.
It's honestly a pretty staggering statistic when you really think about it.
It is, yeah. And today we have a very specific mission. We are analyzing the raw transcript of Abbott's first quarter 2026 earnings conference call.
Right, the raw tape.
Exactly. The goal for you, the viewer, is to understand exactly how a massive healthcare giant navigates unexpected market headwinds. It integrates a multi-billion-dollar acquisition and plans to capture these massive untapped markets.
Yeah, it is a really fascinating look under the hood. You don't often get to see a company of this sheer scale just essentially re-architecting its future in real time.
Definitely.
They are actively balancing these incredibly steady bedrock businesses with some very aggressive forward-looking bets.
Absolutely. So let's start with the baseline, right? The prepared presentation summary that management delivered before the analysts got to ask their questions.
The highlight reel.
Yeah, exactly. First, the high-level financials. Abbott delivered an adjusted earnings per share, or EPS, of $1.15 in Q1, and that perfectly aligned with their start-of-year expectations.
Right, which is exactly what the market wants to see right out of the gate, predictability.
Yeah, for sure.
But the real elephant in the room here, the massive strategic milestone, is that Abbott officially closed its acquisition of Exact Sciences on March 23rd, 2026.
Right. And if you are familiar with the Cologuard test, which is that at-home colon cancer screening kit, that is Exact Sciences.
Yep, that's them.
And the key details on this deal are just staggering. I mean, this acquisition alone adds about $3 billion of incremental sales for 2026.
It does, and integrating a multi-billion-dollar business midway through a quarter, that can create an absolute nightmare for investors trying to track growth.
The math gets so messy.
Exactly. So to keep things totally transparent, Abbott updated its full-year 2026 sales growth outlook to between 6.5% and 7.5% on what they call a comparable basis.
Okay, so meaning they're baking Exact Sciences into their historical numbers as if, like, Abbott had always owned it.
Precisely. It prevents the math from getting messy quarter to quarter. They want you to see the true organic trajectory of the combined company.
That makes sense.
Yeah. They also issued a new EPS guidance midpoint of $5.48. And that specific number is important because it accounts for about 20 cents of expected dilution.
Dilution from the acquisition, right?
Yeah, because when you buy a massive company, there are integration costs, debt financing, and just immediate overhead that temporarily drag down your earnings per share.
Okay, let's unpack the segment highlights. Because Abbott is a diversified giant, which means you always have highs and lows across the board. We'll walk through their four main sectors.
Let's do it.
First up, medical devices. This was a huge win, growing 8.5%. And I noticed the cardiovascular dominance was incredible here.
Oh, yeah, massive.
Specifically, their electrophysiology division, or EP, grew 13%. And it looks like it was completely driven by the launch of their new Volt and TactiFlex Duo Pulsed Field Ablation catheters.
Yes, electrophysiology is definitely a crown jewel for them right now. And for some context on why those specific products are driving such massive growth, we kind of have to look at the technology itself.
Okay.
Pulsed field ablation, or PFA, is just revolutionizing how we treat atrial fibrillation, which is an irregular heartbeat.
Right.
Historically, doctors would use thermal ablation, so essentially burning or freezing the problematic heart tissue to stop the bad electrical signals.
Which, that sounds incredibly risky when you're working inside a beating heart.
It is. The extreme heat or cold can accidentally damage surrounding structures, like the esophagus,
Yeah, wow.
But PFA, which is what the new Volt catheter uses, it doesn't use temperature at all. It uses high-voltage electrical fields to create microscopic pores in the cell membranes of the specific heart tissue.
Okay.
It's a process called electroporation. It targets the heart cells causing the arrhythmia but spares the surrounding tissue. It's safer, it's faster, and doctors are just flocking to it.
That completely explains the 13% spike. Also in medical devices, their continuous glucose monitors, or CGMs, hit $2 billion in sales for the quarter, up 7.5%.
Which is huge.
Yeah, though management did note that was slightly held back by an international tender delay.
Moving on to pharmaceuticals, their EPD division. This looked steady and reliable, up 9%, mostly driven by incredibly strong demand in international markets.
Right. Across Latin America and Asia Pacific, it's the reliable engine.
Yeah. Then you look at nutrition, which is currently bouncing back from some previous turbulence. Yeah, the strategy management deployed here is really interesting. Abbott strategically cut prices in the fourth quarter of 2025, specifically to stimulate volume.
That is a bold move, right? To slash prices on flagship adult nutrition products like Ensure. That eats right into your profit margins.
It does. It definitely takes a bite out of margins.
Mm.
But it's a calculated play on price elasticity. They knew consumers were feeling the pinch of inflation,
Oh,
right?
for sure. Everyone is.
Exactly. So by cutting wholesale prices, they bet that retailers would pass those savings on to consumers, and the sheer volume of new sales would basically make up for the lower price point.
And did it work?
Yeah, early Q1 data shows it is working. The volume is ticking right back up.
Nice. Finally, we have diagnostics. Now, this was a bit of a mixed bag. Core lab diagnostics were up 2%, and cancer diagnostics, which includes that newly acquired Cologuard, surged 13%.
Great numbers there.
But rapid and molecular diagnostics tanked by 10%.
Yeah, that was a tough one.
To me, that sounds a bit like a snow shovel business operating during a surprisingly warm winter. You can have the best shovels in the world, but if the weather doesn't cooperate, nobody is buying.
That is exactly it.
Abbott suffered from a much weaker respiratory season than anyone expected, so fewer people bought rapid flu or COVID tests.
That is a great way to look at it. You can't control the weather, and you certainly can't control the flu season. But what Abbott is essentially arguing with their corporate structure is that they have a diversified enough hardware store that if the snow shovels aren't selling,
The lawnmowers and power drills are.
exactly, their heart catheters and glucose monitors are carrying the weight.
Now, in just a moment, we are going to get into the live Q&A session, and you will not want to miss how the CEO claps back at analysts questioning their flat sales. But before we get to the best part, if you're finding this breakdown helpful, please take a second to click like, share the videos, subscribe to the channel, and stay tuned for our upcoming content.
The Q&A is really where you see management's feet held to the fire. It's always the best part of these calls.
It's exactly.
Yeah.
Let's dive into part 2, the Q&A session breakdown. Wall Street analysts are rarely satisfied, and right out of the gate, David Roman from Goldman Sachs pushed CEO Robert Ford on the philosophy behind the newly updated guidance.
Right.
He essentially asked if Abbott had fully de-risked their outlook, or if there were, hidden downsides lurking in the shadows.
And Ford took this head on. He emphasized that baking exact sciences into the BRIS numbers wasn't a trick. It was entirely about transparency.
Right.
Regarding de-risking the outlet, Ford admitted he took a very conservative approach regarding the flu season. Because Q1 was so weak, going back to your snow shovel analogy, he refused to aggressively forecast a massive Q4 respiratory season to magically make up for it.
That makes sense.
Yeah, he basically reiterated his three main growth drivers. You've got the reliable med tech and pharma, the trajectory-changing recoveries in nutrition and core lab, and obviously the exact sciences integration. He doesn't want to promise investors a revenue bump based on a flu season he can't predict until Thanksgiving.
That actually ties perfectly into a slightly more skeptical question from Robbie Marcus at JP Morgan.
Oh yeah, this was a good one.
Marcus pointed out that if you adjust out the shiny new Exact Sciences acquisition, it actually looks like organic growth for the old Abbott business is decelerating. He wanted to know if this was a one-time thing or a sustainable problem.
Ford didn't mince words here. He essentially dismissed the entire premise of the question.
Really? Just shut it down.
Pretty much. He pointed out that if the Exact Sciences deal had closed just 1 month later, they would have kept the reporting completely separate. Rolling it together right now simply prevents messy quarterly math for the investors down the line.
But, is that just CEO speak to cover up a slowing core business?
Not necessarily. Ford stressed a broader philosophical point about how a conglomerate works. Having a highly diversified portfolio means not every single segment is going to beat Wall Street expectations every single quarter. That is simply reality. The rapid tests missed, but EP devices overperformed. The entire machine as a whole is calibrated to deliver on their financial commitments, even if individual gears are spinning at different speeds depending on the quarter.
Speaking of narrow viewpoints, let's look at the continuous glucose monitor debate. Larry Beagleson from Wells Fargo pointed out that U.S. prescription trends for CGMs look weak. And he essentially asked, is the CGM market finally saturated?
This was my favorite part of the call, honestly, because Ford basically called that viewpoint entirely myopic.
I love that.
He pointed out that analyzing weekly U.S. prescription data completely ignores the massive global total addressable market, or TAM.
I have to jump in here because Evaluating the entire global diabetes market
Right.
based solely on weekly U.S. prescription data, that's like trying to predict the entire global economy by looking at the sales receipts of a single grocery store on your corner.
Mm.
It completely misses the broader picture.
That is spot on. Ford laid out the staggering math on this. There are 500 million people with diabetes globally.
Wow.
Right. And by Abbott's estimation, 70 to 80 million of those people urgently should be on a CGM right now to manage their health, but only 10 to 12 million actually are. That is an enormous gap.
So what's the holdup? How do they close that gap?
Ford highlighted several massive catalysts coming down the pipeline. First, upcoming Medicare coverage for non-insulin type 2 diabetics in the U.S.
Okay, that's huge.
Second, huge international markets are rolling out basal insulin coverage. And third, a highly anticipated dual analyte sensor expected later in 2026.
Wait, let's unpack that. What does a dual analyte sensor actually do differently?
So current CGMs measure one thing, glucose, in your interstitial fluid. A dual analyte sensor measures glucose and ketones simultaneously.
Oh, interesting.
Yeah, because high ketone levels are an early warning sign for diabetic ketoacidosis, which is a life-threatening complication. So this isn't just about market saturation.
Right, it's the safety thing.
Exactly. It's a massive technological leap that will drive an entirely new wave of adoption because it drastically increases patient safety. The market is nowhere near saturated.
That global scale leads right into what Vijay Kumar from Evercore ISI asked regarding Cologuard. He wanted to know how Abbott plans to sustain the mid-teens growth of Cologuard, and if there is, like, an international angle, and is there upside to the guidance?
Ford is incredibly bullish here. He noted that the market is vastly underpenetrated. I mean, there are 50 million Americans right now who are not up to date on their colon cancer screenings.
50 million. That's wild.
It is, and Ford explained the underlying mechanics of why Cologuard is so vital. There is a massive physical bottleneck in the traditional healthcare system. U.S. colonoscopy capacity is fundamentally capped at about 6 million procedures a year.
Because there are only so many rooms and only so many hours in the day.
Exactly. And
Yeah.
meanwhile, the number of gastroenterologists entering the field is actually dropping.
So the demand for screening is skyrocketing, but the supply of doctors available to physically perform the screening is going down.
Precisely. You can't just mandate more physical colonoscopies. The system would literally break. Cologuard sidesteps that physical bottleneck entirely because it's a DNA stool test you do at home.
Right.
Abbott now commands a 1,000-person sales force pushing this. They have seamless digital integration with healthcare records and a recurring revenue model. What's fascinating is that 25% of their tests are actually rescreens.
Oh, so patients coming back every 3 years is part of their routine.
Yep. Plus, Ford mentioned major international expansion plans. He just spoke to health ministers in Asia and Europe who desperately want to increase cancer screening in their countries without having to build 1,000 new hospitals.
That makes total sense. Let's shift gears to structural heart. Matthew Taylor from Jefferies asked about the trends in that division, specifically regarding left atrial appendage closure, or LAAC devices, and upcoming trial data.
Okay, so first, to understand LAAC devices, you have to look at atrial fibrillation again. In patients with AFib, blood can pool and clot in a small pouch in the heart called the left atrial appendage.
And if a clot escapes, it causes a stroke.
Exactly. So a LAAC device, like Abbott's Amulet, is a tiny implant that permanently seals off that pouch.
And Taylor wanted to know how sales for the amulet are doing.
Right. And Ford revealed a very strategic internal shift here. Abbott recently moved the Amulet out of their structural heart division and directly into their electrophysiology, or EP, division.
Wait, why move a physical heart implant into the division that deals with electrical mapping?
To boost sales by aligning it with the doctors actually doing the procedures. Yeah, EP doctors are the ones mapping the heart and dealing with AFib. By moving the device to the EP sales force, Abbott just leverages their existing relationships.
That's smart.
Yeah, and Ford was quite candid, admitting that they have faced tough competition in the mitral valve space and that they absolutely need better commercial execution in the U.S.
I love when a CEO just flat out admits, yeah, we need to execute better over there.
Yeah, it's refreshing. Though he did note that international growth in structural heart remains very strong, consistently hitting double digits.
Now, Travis Steed from BofA Securities touched on a different kind of execution. He asked for more color on the volume recovery in the nutrition business and how Abbott evaluates ongoing portfolio management when a division hits a rough patch.
Ford's response was very reassuring for that sector. He confirmed that the targeted Q4 price cuts we discussed earlier have immediately stimulated volume growth.
Nice.
It just takes a little time because retailers have to pass those wholesale savings down to the consumer level and the grocery store.
Right, there's a lag.
Exactly. Regarding portfolio management, Ford noted that he evaluates every business unit constantly with the board of directors. But he was adamant about one core philosophy.
Which is?
They will never make long-term strategic decisions, like selling off a division entirely based solely on near-term transitional challenges. They play the long game.
Good to know. Next, Joanne Wunsch from Citi zoomed way out to the macro level. She asked about the impact of the conflict in the Middle East on patient volumes, reimbursement, and raw material costs like oil and resin.
This really highlighted Abbott's operational resilience. Ford stated that Abbott is literally built to withstand these kinds of global macro shocks.
How so?
They utilize dedicated gross margin teams working daily from 8 a.m. to 6 p.m. specifically to anticipate supply chain issues and negotiate with suppliers before a crisis even hits the bottom line.
Wow, so they're incredibly proactive.
Very. So far, they have seen minimal impact. There are definitely logistical challenges in securing shipping lanes, and they occasionally have to charter cargo planes to get the product into the region, which requires holding slightly higher inventory locally.
Sure, that makes sense.
But crucially, despite all the geopolitical noise, they have seen absolutely zero drop-off in actual patient demand or hospital reimbursement in those regions.
Going back to the tech, Josh Jennings from TD Cowen wanted to dig deeper into the electrophysiology franchise, specifically the new Volt product launch, and Abbott's view on overall EP market growth.
So Abbott is currently doing a limited market release for the Volt catheter in the US and the TactiFlex Duo in Europe.
A limited release, so they're testing the waters.
Exactly. This controlled rollout helps them gather deep clinical insights before a full-scale commercial launch. And the feedback so far is spectacular. Physicians are specifically praising Volt's ability to be used with conscious sedation.
Wait, why is conscious sedation such a big deal compared to general anesthesia?
Because it completely changes the economics and throughput of a hospital clinic. General anesthesia requires an anesthesiologist, a longer recovery time, and it just carries higher patient risks.
Right.
If a doctor can use the Volt catheter while the patient is only lightly sedated, the procedure is faster, the patient goes home sooner, and the hospital can treat more people in a single day.
That's a huge operational advantage.
Massive. Looking at the bigger picture, Ford expects the total EP market to grow in the mid to high teens, and he fully expects Abbott to grow even faster than the market by the end of the year.
Okay, final question. Marie Thabot from BTI asked about the core laboratory business trajectory by geography, specifically regarding China's volume-based procurement, or VBP, headwinds.
Right. To understand this, you kind of have to know how VBP works in China. The government essentially acts as a massive bulk buyer.
Okay.
They tell medical companies, we will guarantee you millions of patients, but you have to slash your prices by 60%.
Ouch. That absolutely guts your profit margins initially.
Yes, it does. In China, Abbott's core lab sales were completely flat in Q1. Now, flat might sound like a disappointment, but Ford actually considers it a major victory.
Why is flat a victory?
Because last year, sales were dropping 15% to 30% every single quarter as those VBP pricing policies took effect. Flat means they have finally stabilized the ship and absorbed those price cuts.
Ah, I see. And how is the rest of the world doing in core lab?
The U.S. market is remarkably strong with high single-digit growth. They have a 90% plus contract renewal rate and an impressive 55% win rate on brand new business against competitors.
That's solid.
Yeah, and Europe is also steadily growing in the mid to high single digits.
So, zooming out, let's get a high-level wrap-up of everything we've just unpacked from this incredibly dense earnings call.
Yeah, when you synthesize the core themes of the prepared presentation and the rapid-fire Q&A, this earnings call tells the story of a diversified healthcare giant in a very calculated transition.
Right.
They are relying on their incredibly consistent medical device innovations, like their EP catheters and dual analyte sensors and their pharma arms, to provide a rock-solid financial bedrock.
And at the exact same time, They are aggressively integrating exact sciences because they see the physical limits of the current healthcare system, right?
Yeah.
They want to completely dominate the future of at-home cancer screening.
Exactly. And all the while, they are methodically repairing the temporary soft spots in their nutrition and rapid diagnostics businesses. It's really a masterclass in sustaining the core while buying into the future.
Thank you all so much for coming and watching the video today. If you enjoyed this breakdown, please click like, share the video, subscribe to the channel, and stay tuned for our upcoming content.
And I want to leave you with a final thought to chew on. Considering the staggering bottleneck we discussed in physical procedures, like hospital colonoscopies, and this massive strategic shift toward incredibly accurate at-home techs like Cologuard, alongside wearable, continuous dual analyte monitors,
Yeah.
are we looking at a rapidly approaching future where the hospital comes directly to your living room before you ever actually get sick?